Markets are crashing. The economy is doomed. Trade wars will destroy your savings. Sounds familiar? Open your browser, scroll through the headlines, and you'll see a storm of fear. Trump's tariffs will wreck the global economy. NATO collapses, geopolitical chaos ahead. It's enough to make anyone clutch their portfolio and run. But here's what they won't tell you. These scares are designed to make you panic. And if you let them, you'll miss the biggest opportunity of your financial life. I'm here to cut through the noise. This isn't about politics. It's not about who's right or wrong in the headlines. This is about your money, your future, and the forces shaping both. Because whether you love him or loathe him, Donald Trump's policies and the global reactions to them are sending shockwaves through the markets. And those shockwaves, they're not all doom. They're signals. Signals for smart investors to act. Let's rewind. Tariffs. Remember the Smooth-Hale Tariff Act of 1930? It was a desperate move to protect American industries during the Great Depression, and it made things worse. Global trade collapsed. Economies crumbled. Sound like a distant memory? Think again. In 2023, Trump's team announced $45 billion in new tariffs, targeting China. That number isn't abstract. It's a ticking time bomb for your pocketbook. Why? Because tariffs don't just punish foreign goods, they punish you. The price of your morning coffee, your new iPhone, even your kid's backpack, all tied to global supply chains, now carry a hidden tax. And when prices rise, consumers cut spending. Businesses slow hiring. The economy stumbles. But the real danger isn't the tariffs themselves, it's the uncertainty. Markets thrive on predictability. Trump's playbook. Volatility. Every tweet, every meeting, every sudden shift in policy sends investors scrambling. Is this a negotiating strategy or economic sabotage? Let's not forget, he's a deal maker. He doesn't want a war. He wants leverage. And leverage means chaos. Meanwhile, the world is pushing back. BRICS nations, Brazil, Russia, India, China, South Africa, are forging a new path. They're talking about a common currency, trading outside the US dollar's dominance. Imagine a world where oil isn't priced in greenbacks, where your retirement fund's value isn't tied to American hegemony. This isn't a conspiracy, it's a seismic shift. And if the US isolates itself, investors could face fractured markets, currency swings, and a loss of global influence. Then there's NATO. Trump's hinted at pulling the US out if allies don't pay their dues. That's not just a diplomatic slap, it's a threat to stability. NATO isn't perfect, but its framework has kept conflicts contained. Without it, Europe could splinter. Russia could rise. And when geopolitical tension spikes, stocks crash. Defense companies might surge, sure, but tech, energy, and consumer sectors, they suffer. Market confidence isn't built on tariffs or tweets, it's built on trust. And trust is what we're losing. Now here's the twist you won't hear on cable news. Trump might want to crash. Let me explain. If he can force the Federal Reserve to lower interest rates, the US government's debt burden lightens. Every 1% drop in rates saves $220 billion annually. That's not chump change. It's a lifeline for a country drowning in $34 trillion of debt. So is this chaos intentional? A gambit to pressure the Fed into action? Or just the usual storm of incompetence? Either way, the result is the same: a roller coaster ride for your investments. But history has a lesson for you. The 2008 crash. The 2020 pandemic plunge. Those who stayed calm, who bought when others sold, are sitting on generational gains. Panic is the market's deadliest trap. Discipline is your weapon. So here's your first step: invest while it's down. But, and this is critical, only if you've got a safety net. Emergency fund. Check. Debt under control. Check. Then platforms like sponsored trading platform let you buy fractional shares, even at these lows. Second, master the cycles. A 10% drop isn't a crash, it's a correction. 20%. A bear market. But real crashes, they're rare. And if you're emotional, you'll buy high and sell low. Dollar cost averaging turns this chaos into your ally. Spread your investments over months, even years, and you'll avoid timing disasters. Third, diversify like your future depends on it, because it does. Stocks. Bonds. Yes. But also precious metals, real estate, and yes, even cryptocurrencies. Dividend stocks. They're your steady paycheck in a volatile world. The bottom line: fear sells headlines. Opportunity builds wealth. You've got two choices: be a statistic or be a strategist. Which will you pick? Hit subscribe, and let's turn this crisis into your comeback. Oh, and if you're ready to learn why the Fed's next move could make you rich or bankrupt, watch my next video. The clock's ticking.